Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Wednesday, December 14th, 2022. Before I jump into the charts, before I forget, please click like if you would each and every time you watch the daily Tesla report. We really appreciate it. It does help us out a great deal in being found. Also subscribe. Subscribing to the Wicked Stocks YouTube channel provides you notification each and every time new content has been uploaded. That includes the daily Tesla and daily Apple reports, along with other periodic videos that we put out. And, if you would share the content with friends and colleagues, we'd greatly appreciate it. So, big sell off on Tuesday. On the heels of what was a rally, actually, in the broader market, we did close the day below the 165.87 formation, which is the bottom, really, of a base of long-term support that begins at 173.98. So you can see that here. 4-star levels. I'm not sure if we're going to settle Friday below it. It looks like we may well settle Friday below 165.87. And if we do so by a full 1% margin, which would be 164.21 settlement price on Friday or lower, that sets us into another meaningful sell phase that should play out well in a January trade. We may be in the midst of that already, and I think you can play that right now, at least tentatively, playing the short side, liquidating a long position perhaps, if you're an investor, a near-term investor in the 2 to 3 month time horizon, because holding below, closing below 165.87 by that 1% margin, my next target, and this is another weekly chart, in the 109.97 to 121.67 area. I think this is realistic, perhaps by the end of January as our next objective, where we could bottom out on a monthly basis. I am going to repeat that if we close the week below this significant long-term support at 165.87, I'm not personally interested. Well, it's not even interest. It really is. I see no good reason to play the long side in Tesla until we show clear strength, like a clear buy signal that would be not only back above 173.98, but as the weeks go by, some variation of this channel structure. Now, this is a daily chart, 192.32. So yes, closing the week back above 173.98 would stabilize the outlook. But if we get that sell signal below 165.87 on Friday, 164.21 or lower, the 1% margin, and we continue south into the 110s over the next 3 to 5 weeks, it would be a settlement above this structure, a similar structure, 192.32. Of course, it'll be lower than that would tell me that we can buy on strength. What am I actually saying? What I'm saying is, despite the fact that I think this could contain monthly selling pressures, it's dropping at a pretty good rate. And as I've been saying now for weeks, if we do get the settlement below not only 172.94 and 179.83, but also below 165.87, so forth and so on, we enter a pretty miserable phase for Tesla, I think, where we're going to see continued declines as we move well into 23. I don't know what the fundamentals are. That's really not what I do. But just looking at this chart, long-term head and shoulders formation, yes, this channel structure can contain selling on a monthly basis, but we can rally from there back into the 160s, 170s, of course. But that area may well then contain buying on a longer-term basis as we continue south for a repeat test of this descending channel support, so forth and so on. I'm not going to belabor that point. Let's jump back to today itself. So for the day itself, 158.06. We closed just above this channel structure, and yes, we broke below it, but we settled right at it, just above it. It can contain intraday selling still, 158.06, and from here we can rally up quite easily to 165.87 today. 165.87 is, once again, that long-term channel bottom on the weekly chart, and it really is a range up to 173.98. So if we get up and over 165.87 today, we may well reach 173.98 on an intraday basis, which is this long-term channel structure on the weekly chart. And we can use it for day trading purposes, 173.98. It's not altogether different than the 175.05 high from Tuesday. And if we close above 173.98 today, then I do think that over the next few days, we should then test 192.32. And this channel structure is a significant upward pivot point into January. If we close above 173.98 on Friday, I'm going to say, okay, prove it to me. Show me. let's see the settlement above 192.32. And then we have an outright buy signal that should push into the 230s over the following 3 to 5 weeks. But once again, getting out ahead of myself here. In fact, having closed below 165.87 today maintains a heavy dynamic into later week. And if we break or open today below 158.07 or 158.06, I'm not expecting 141.07. I mean, we may reach it. I have as an intraday support level only, but I would expect with a break or open today below 158.06, the 146.63 level, where we could actually bottom out perhaps through the rest of the week. 146.63 is nothing more than a simple trend line, but it's a long-term one. It goes back to earlier in the year when we had a February low and a May low. 146.63 in reach today. If we break or open below 158.06, the 146.63 trend line able to contain selling through the rest of the week. And from here, we can bottom out and rally back into that 165.87 to 173.98 region within a matter of 3 to 5 days.
Just so you know, a WickedStocks.com membership delivers regular daily video analysis in the SPY and Triple Q, weekly video analysis in the S&P 500 index, the NASDAQ 100 index, and a U.S. Treasury ETF, and 2 individual stock pick videos every week. Check out our other content by clicking the link below.
If we close today below 146.63, that is today, then we should tomorrow test 133.15, a new descending channel bottom over the last month or so that can, yes, contain weekly selling pressures. But by that point, we will very likely then close the week below 165.87 by the 1% margin. And if we do on Friday, I will be talking this as our next realistic objective that I would expect by the end of January or sooner, 109.97 to 121.67. So I don't know if there's really anything. I'm scouting the chart here to see if there's anything worth saying. Here's something you might look at. I've been following I follow Triple Q. I have a daily Triple Q report you should know about at wickedstocks.com. It's part of our premium package, also daily SPY report. But the daily Triple Q, or I should say the Triple Q itself, this is a weekly chart of the Triple Q, the NASDAQ 100 ETF. We did settle a few weeks ago above this long-term descending speed line by not a 1% margin. I did say that wrong, didn't I? We did not close above it by a 1% margin. I need the 1% margin, so I'll be watching this, and I'll be giving you that number on Friday. If we close in the Triple Q above 285.53 by a 1% margin on Friday, we enter a buy signal phase that is yet to emerge for the Triple Q. And while I'm at it, I'm going to mention that this long-term speed line projected off the March 2020 COVID low in the Triple Q has been performing very well in containing buying pressures. It also roughly contained Tuesday's high, and we backed off from it. So, I'm going to also want to see a settlement above the 297.82 speed line. If we get both by Friday's close, we're off to the races for the Triple Q, 347.03. Here we come within 2 or 3 months. Under that scenario, I think it's likely then that we'll also see the Tesla close the week back above 173.98. Now, just so you know that this settlement, this is a Tuesday settlement. We're still early in the week. So, it looks like a sell signal right now. That's intra-week only. So I do need to see how we settle out on Friday with regard to 165.87. If below it by a 1% margin, we're into the 110s now by the end of January. But if we can close even inside this zone between 165.87, and certainly if we can close above 173.98 by Friday, and that is certainly possible, this is a mere test. An aggravating one for those of you who are trying to pick a long position in this zone, but nonetheless, spiking through support only, not closing below it at the end of a week, does just keep this market in a stable dynamic. And once again, I'm going to be relieved if you're buying this market, any of us are buying this market, it is a settlement above 192.32 that would breathe a sigh of relief for the upside, where I would expect bullish continuation into January trade. I think that pretty much rounds it out for Wednesday's Daily Tesla Report. Please click like and subscribe if you would. Be back tomorrow with Thursdays. You have a great day.